Interesting to see shares in the company today. They were weaker to the tune of 1.4%. Let us go live to Pete McGuire, XM.com's chief executive in our Sydney CBD studio. Pete, warm welcome to the show. Lots of developments in the sector to occupy our minds, even on an international footing, never mind bringing it all back home. But let's start on the domestic front. You know, you've heard even out just in the last half hour from BHP talking about an imminent rebalance in the oil markets. It's in their interest to be saying that, I guess. But more to the point, are you seeing signs of that from your perch?
Well, good afternoon, Carson. You know, where we're sitting at the moment, you know, that 50 to 55 seems to be the trading range. To see some sort of breakout, we've got to see, I think, some geopolitical concerns across that Mid-East region. Though, if you're looking at it holistically, that whole area seems to be fairly subdued. Iran seems to be a bit of a problem at the moment, but I can't really see that crude's going to push that much higher because you've got that Baker Hughes rig count increasing week on week, fifth week up. So there's an increase as far as production coming out of the States, and Russia's now overtaken Saudis, Carson, as the #1 producer in the world. So I really think that we're still awash with oil. We're 90 days out approximately from the next OPEC meeting, and those prices, I think, will hold till that point.
It's interesting. The bias for lowering debt remains front and centre for these energy and material giants. BHP saying while the balance sheet's strong, ongoing focus on debt reduction during this period of elevated commodity prices to protect us through periods of higher volatility and support counter-cyclical investments as we move through the cycle. If we just cross quickly, Pete, to copper, guidance under review, so says BHP, because of the strike at Escondida. What might that do globally to the mix on price?
Well, you've got to take Escondida, but also take on board Grasberg as well in Indonesia. That region is really under the pump as far as Freeport McMoran. Its share price was, you know, that $15 to $17 trading range. It's taken a little bit of a hit recently, and there's certainly major concern as far as that copper production over the next, say, 3 to 6 months. So if those mines come back on play as far as Escondido and Grasberg without too much collateral damage, then I think that the copper price will probably, you know, stay around that 61, 62. Was sold off over the last couple of days, and I think it's probably just taking a bit of a breather at the moment, but I think it'll be upwards from here because naturally the industrial demand from infrastructure spend and, of course, you know, President Trump's agenda.
Pete, it's Adam from Shaw & Partners.
G'day, Adam.
How are you going? I just wanted to quickly go back to oil because there's been, obviously we've talked about this a bit, but there's been a very large bullish position on crude that have been going through the oil futures. And we've seen another record high of 558,000 contracts up a fair bit, and there's an equivalent of 903 million barrels of oil that these long positions are now holding. What happens when this starts to unwind? Well,
and just on that, Adam, it's the largest position, just for the viewers, in money managers, it's the largest futures and options positions on record.
Wow.
So that just gives us some sort of an idea as far as, you know, the volume in it. So what you're saying, what happens when people exit? If there is a stampede, naturally the shorts, naturally people will get squeezed, the longs will have to take, you know, maybe a bath. This is the issue at hand, and leading on into this, naturally, is that Saudi Aramco float. So all of those sort of ingredients are going into the pie. I think they'll probably hold, you know, unless you see something dramatic happen over the next couple of months. I think they'll stay at this sort of trading range, but I think it's going to be gloves off come July, August, summer driving season, have some weather outages and a couple of other issues, and you may see prices really create a lot of, you know, big volatility swings, Adam.
But we've got Aramco coming in mid this year. They're going to IPO this time, sort of mid-year 2017. Is that right?
I think it'll be probably, that could be a fraction early, but you know, there's no doubt that the Saudis are, you know, getting all their ducks in a row. Everything's online. They want naturally a higher price from their due diligence on their prospectus, and they want to hit that, you know, $50 plus number. So let's just see what happens over this next couple of months. I think it's going to be crucial. It's going to be one of the best years as far as trading in commodities. Think of Le Pen, think what happens as far as Holland, and of course the German election. So all of those components running in from hedge funds and uncertainty with US dollar, it's going to be one hell of a year.
Yeah, incredible to think it would value the company a 5% slice at $2 trillion to bring in $100 billion from investors. So HSBC, JPM, Morgan Stanley, eat your heart out. You know, on multiple continents, they will come like lemmings to that one. I mean, do we worry, to extend the lemmings metaphor, do we worry that, you know, this is perhaps signalling, you know, you don't sell unless it's at a peak? If things were only going to get rosier, why would they interrupt the revenue stream? Why would they share what could be all theirs?
I think principally, Carson, the hemorrhage that the producers, BHP, for example, Adam mentioned $15 it was. You look at the Freeport, McMoran's down to $5.50, $6. They were really hit, you know, in Saudi Aramco. Look at the rig count. Look at what happened across in the 14s in 2014, 2015. It was just a global phenomenon. They just got completely and utterly washed out. So they're trying to rebalance themselves and naturally sell some of the asset. They've got large debt and large debt overhang, and that's the issue at hand. So that's why they're taking it to market. They want to raise some capital. The Saudis, by principle, you know, a lot of those students, a lot of the young people, it's a very young demographic, are employed by the government, and naturally they need to be fed.
Not some more sovereign bonds. They brought in $17.5 billion through that last year. You're saying that the coppers are still running dry. I mean, less LV and perhaps more focus on students, Crown Prince.
Yes, maybe less palaces.
Yeah.
They tell me there's about 2,500 palaces over there, so that's they certainly like building them, and it gets a bit hot, so I'm sure the air conditioning would be at max capacity.
One for every wife and concubine, and still counting. But we move on into back onto matters of the not of the heart but of business. Shall we talk coal? Meanwhile, I mean, what are you seeing the entrails of all these results, even as they come through, even today? I mean, it's incredible when you think of BHP and its numbers. I mean, coal has been such a profit turnaround that you wouldn't believe it.
Dramatic. I mean, you know, in the last 18 months, you couldn't have written a better story for it. And look at what's happening, the uncertainty as far as energy consumption, population base explosion, electricity demand across all of the big grids. I'm talking, you know, look at what happened in South Australia. But they think that's a worry. Go to China, go to India and really experience what, you know, brownouts are and what impact it has as far as no electricity production or and all sorts of issues, you know, for the best part of a couple of 100 million people, which isn't unusual over, you know, that massive drawdown as far as, you know, peak summer in, say, New Delhi, where it's 45 every day, or, you know, what happens in the Middle East. So that's the issue at hand, and I think that you're going to see more problems as far as coal and all of that leading into the energy side of it. So I think you're going to see stronger prices from here. And that's I think the great ingredient as far as the commodity boom. I think it's back on track, and you know, get out of the way, because there's a lot more to be built and a lot more energy to consume.
So perversely, all these strikes, all these government intervention flurries, which was part of our discussion there on copper. You flagged Freeport, McMoran as well in the mix, Grasberg in Indonesia. It is all ultimately, though, a win-win, is it not, for the miners themselves? How do they slip up in this scenario? It seems that they, you know, they might be mining less, but banking more. It's less about volume than it is about quality.
Well, it is, but remembering that you have to, if you've got mine disruptions as far as strikes and the Grasberg situation, it could be delayed and could be drawn out. Escondido could be a similar sort of situation. There was very little capex that went into these mines in 12, 13 and 14 and 15. That seems to be turning around a little bit now. There were natural problems as far as some of those issues you had in South America with BHP. So all of those taken on board, and naturally what happened, for an example, the flexibility of the workforce in the rig count, how it was smashed. No one was working. Now they're all piling back in. So that just shows the dynamic nature of these markets, that people can go from, you know, being a Uber driver to all of a sudden you're back working on a production rig. And that just demonstrates, I think, Carson, that the core componentry of a commodity boom. People put it to bed. People said, well, look, it's just about had its day in 13, 14. Well, it's turned around, and I think it's going to continue all the way up to 2030 because you've got too many mouths to feed.
That's interesting. And in spite of that, BHP's board's approved a bond repurchase plan of up to $2.5 billion US, which just sort of underscores, in spite of everything you say, and maybe because of it, you know, if it's sort of one step ahead of global growth, then rates are not going to remain stuck on zero. They got a window of opportunity. They got to grab hold of it.
Yeah.
Lest they pay more tomorrow than today.
Well, that's right. I think, you know, and taking your mind across to, you know, the uncertainty factor, what goes on as far as precious. Gold's had a really nice stellar run. Silver's up 13% from that industrial demand over the last 2 months. And all of those, keep an eye on the platinum, keep an eye on palladium. That's really, you know, they're the undercurrents that are creating a lot of market awareness, and traders are having an absolute boon on. Stan Druckenmiller, you know, Carson, one of the biggest hedge fund guys in the States, a living legend. December, January, he was a buyer of gold because of uncertainty with the US as far as what's going on with Trump and so on. So all of those players are very much mounting positions and really, you know, keeping a very close eye on the gold side.
Nice to talk, Pete, as always. Thank you so much. Chief Executive XM.com there.